Tech stocks tumble on worries over AI spending in China's chips. That's the headline from the New York Times, and it captures a day of volatile trading that has been building for weeks. The Nasdaq Composite, packed with big technology names, slid more than 1% early Tuesday before clawing back to finish down just 0.2%. Even with that rebound, the index came close to what Wall Street calls a correction, a drop of 10% or more from its recent peak. The sell-off has been especially harsh on chipmakers. Micron and Advanced Micro Devices each fell more than 8%, while Nvidia, the leading AI chip supplier, nudged lower before turning positive but remains over 15% below its May high. Elon Musk's SpaceX, which also has AI ambitions, recovered from an early slide but still sits more than 40% below its June peak. The turbulence isn't new. Over the past month, investors have grown nervous about the massive capital outlays big tech companies are pouring into AI infrastructure. At the same time, cheaper AI models are threatening the dominance of a few US-listed giants, and competition from China is eroding South Korea's hold on the memory chip market that's critical for artificial intelligence. Those fears spilled into Asian markets on Tuesday. South Korea's benchmark Kospi index plunged nearly 11% at one point, triggering a temporary trading halt. The index has lost a third of its value over the past month, though it's still up more than 40% for the year thanks to the rally that preceded the drop. Benchmarks in Japan and Taiwan each fell around 4%, and Chinese stocks dropped more than 2%. The pressure crossed the Pacific. The Nasdaq 100, which strips out banks and leans even heavier on big tech, fell 1% and ended the day almost 10% below its June peak. In Europe, German chipmaker Infineon dropped just over 6%, and Dutch semiconductor equipment maker ASML shed nearly 3%. Meanwhile, the Dow Jones Industrial Average, far less exposed to tech, rose 1%, a sign investors are zeroing in on AI-specific concerns. Apple, which has taken a more restrained approach to AI than some peers, rose 0.9% and briefly crossed a $5 trillion market valuation earlier in the session. The latest spark came Monday, when shares of China's leading memory chipmaker, Changxin Memory Technologies, began trading after a blockbuster initial public offering. That debut underscored how quickly Chinese firms are moving up the value chain in semiconductors, adding fresh competitive pressure on established players. So where does this leave markets? The sell-off reflects a broader reassessment of how much AI spending is sustainable and who will ultimately capture the value. For now, volatility remains high, and investors are watching chipmakers, AI budgets, and geopolitical tensions closely. Thanks for listening. I'm your host, and we'll be back soon with more on the intersection of technology and markets.